Back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. I'll ask for returns for you guys to smash that like button. Let's see if we can get today's video over 30 likes. And here we are with the SPY, the S&P 500 index, coming back down from a rip area into a dip area and actually fighting within this channel from the 52-week lows to up towards 370, right? And our new 52-week low was hit today at 359. Now, while the SPY was going lower, our SPY bot since 8:05 a.m. sent out a bear indicator, and from that moment forward towards the bell and into the bell, there was a further continuation of weakness. And as you see there in the chart, the outflows continue to dominate. It rejected before getting to the midpoint and stayed below it, pulled down with further weakness, and put options went up 200% plus within an hour, guys. If you guys want to receive this clarity and edge over the charts, check out the link down below in the description to the 42 vision indicator, getting connected to our SPY bot, our QQQ bot, our newly released Tesla bot, Apple bot, and we have many more on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. And this is my opinion and perspective alone. Volatility is here to stay. And to be able to maximize within the volatility, having a clarity and edge makes all the difference. And it doesn't have to be 42 vision. But if you find value in what we share here and you want to become part of a growing community of investors using these resources to maximize within the volatility, check out the link down below in the description once again to the 42 vision indicator. So here we are with the SPY, as I stated in this channel, rejecting, and I was going to watch clearly if the inflows would hold up or if it would reject, and that's what we're going to break down in today's video. We're going to talk about key levels and data points that came out today. Super important information that led to this pullback, right? But before we break it all down, I want to share with you guys the home run opportunity I mentioned this morning over at the Discord. And as you see popping up here on the screen, these are some of the home runs I've managed to find this week alone. And while not guaranteed to be this way every single time, we strive for opportunities like these every single day. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors all looking to learn and grow together. So these are the three stocks I mentioned this morning. All three of them gave jumps of 3 to 5%, 5 to 10% plus, but one of them turned out to be a home run, and that was bbby. We caught this one in the pre-market under a bull indicator. It was above the midpoint here with the inflows actually pulling downwards. It stayed above it, consolidated, and towards the bell, full strength here on 42 vision. The inflows picked up, and it jumped up 10% plus within minutes. Now, in its pullback, the outflow started to dominate. It actually crossed the midpoint, got a bear indicator, consolidated, and from the dip to the rip, and those inflows picked back up, it reached a highest point of 20% plus, guys. If you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. So here we are with the SPY, the S&P 500 index, and the S&P 500 continues to bounce off the 52-week lows here, but continues to reject in the same area near the 370s, and we're back down here at the 52-week lows, and we even hit a new low today, right? We have to cover what's going on, and the big question mark is, will it ever get out of this channel to the upside or to a complete downside, right? The bears taking over and pushing it down. Well, we need to talk about what's going on here and what data points came out today that actually made the stock market go lower within today's volatility. But I'm going to pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected to our SPY bot, the QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities. And you can now join the members using these resources to maximize in either direction by receiving this clarity and edge over the charts. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. And slots are now open for those interested. The link is down below in the description to the 42 vision indicator. and our inflow versus outflow. So here we are with the SPY, and you could see within this tight range, right? I keep drawing this channel here that I keep showing you guys the times that it actually has had strength and it's had weakness, right? Those bear indicators pop up, the outflows end up dominating, and then on the way back up, those bull indicators have popped up and the inflows have ended up dominating over the chart. So you can clearly see where there's strength and where there's weakness. And one of the strongest inflows was yesterday, right? The stock market went from the 360s, the S&P 500, all the way to 370s, and we've pulled back the same amount. And here you could see the money that's coming in and the money that's coming out. That's the whole point of being able to see the inflows versus outflows. The bull and bear indicators are there as extra layers of confirmation, and then also the transitions of where things are overextending into the rip area, as we call it, when it's bright green, and into the dip area when it's white with red borders of extreme weakness. And you can see that it's actually hit a dip area and people are buying up that dip, right? The S&P 500 is actually going ahead and getting inflows. Now we need to watch going into tomorrow though. Is it going to cross here on the 30-minute, and how strong is it? And apart from that, you can come over to the 15-minute and you can see that those inflows have just crossed, right? And the outflows yesterday, they were getting pretty close, and I stated I'm gonna watch if it could go lower, and if a bear indicator pops up, and there it was, it pulled below it, it actually pulled further away from it, bear indicator, and complete transition from the rip to the dip area. And here we are in an area where on the 15-minute the inflows have crossed over and the 30-minute is trying to come closer. So we have to break down the key levels here and what made the stock market go lower today, specifically the SPY, the S&P 500. So the S&P 500 went lower today due to one data point. This data point, no matter how negative it came, whether it was extremely negative or even negative 0.01, negative is negative. And it was the GDP numbers as you see it on the screen, guys. That had an effect. That's the final revision of Q2, and now we've actually had confirmed 2 quarters back-to-back negative GDP. Now, has a recession been announced? No, but in this price action from way up here all the way down to where we're at, if you zoom out and look at this from the 1-hour chart, if you zoom out and look at this from the 2-hour chart, you could see that we've been under bear indicators that have dominated the chart to the downside in the last several weeks. Well, the market has been trying to price in a possible recession, or if we get declared to be in one, we're a lot closer to the bottom than the top, right? Because we were back up here towards 430s just a few weeks ago and about a month ago, right? And here we are with the outflows dominating on the 2-hour. They actually pulled upwards, and not only on the 2-hour, but also on the 1-hour, and now we're back below it. So very interesting levels of outflows on multiple time frames. And then apart from the GDP numbers that came out on the data today, also oil, guys. And I talked about this in my previous videos. Even before the news that came out yesterday, I was just talking about the inventories to watch it. Turned out to be negative, and actually oil started to run from the recent area that it was at, its recent lows. It's actually the lowest that we've seen at $76. It ran the next day all the way to 78, and then it dipped back down like if nothing happened, and all of a sudden it's been running from 76 again due to the fact with the pipeline explosion, and then also on top of that, everything going on with the markets, guys. This is also affecting the volatility within the S&P 500, and I'm going to be watching here these inflows as they continue to dominate here. Based off the 30-minute, we're above it, and if it continues to pull upwards, it could have a huge impact. I mean, look what happened when it crossed and continued to pull away from it. It ran from 76 all the way up towards $82, and here we are at around $81 and a barrel, right? So super important per barrel at $81. So let's talk about what's going on here. The first thing is, if we break through these lows of 359, 360, the next support I'm watching is 355, and below that is 345. And I'll be watching if these outflows continue to dominate and pull away from the midpoint to the downside. We're currently under a bear indicator, and these bear indicators have been short-lived for the last several days within this range. They get canceled pretty quickly by these bull indicators, right? They go ahead and get canceled quickly by these bull indicators. Is it going to be the same case here this time? We'll have to see. But we've talked about a possible double bottom. We've triple bottomed here and quadrupled bottom. So we need to see, is this finally going to break out? Because this needs to choose a side, guys, especially with the VIX where it's sitting right now. It's near overextended areas, but if it continues to fight to go above 35, the VIX could continue, and it could continue to impact the stock market as well. But a lot of people are hoping for it to cool off and get back below the 30s. Right now, it came back to the 30s, got a bull indicator here, and is pulling away from it. Now, based off 42 vision, it's done a full transition, and it's kind of sitting sideways right now. So we'll see if it rejects up here and goes back down. But if it actually gets legs and continues to push up higher and go to newer highs that we've not seen in months or weeks, that could actually shake up things even further. So something to keep in mind here as the SPY continues to range in this tight range. I mean, this is a very interesting area that the S&P 500 is in, because it actually has stayed stuck here, right? The S&P 500 has either gone a lot higher for continuous days or a lot lower, and right now the SPY has literally been in the same area, right? Literally from the 360 to 370s, and I talked about it for this whole entire week. It's going to be important to watch these levels, how it reacts, and every time it's came back down and it bounces off of it, I'm like, well, let's see if it double bottoms, let's see if it triple bottoms. Here we are for a quadruple bottom, and these outflows and inflows have been back and forth and very clear here with our bots and indicators, the inflow versus outflows and the bull and bear indicators. I mean, it's been very clear, and the volatility, as I stated, not financial advice, it's actually here to stay. I don't think it's going anywhere, and having clarity makes all the difference, guys, to maximize. Now, here we are. Let's just talk about it. It's in that tight spot. The support levels, I talked about it earlier, and to the upside, this needs to break above 370. And tomorrow is PCE data, and that's going to be important. The markets are going to be watching for that. These inflows are pretty close. We'll see if they cross over or if they reject and stay below. As always, guys, thank you guys so much for watching, and let's make some money.